Good morning, everyone. I'll start the podcast in another 30 seconds. Participants are still joining. Sorry, excuse. I think we are good to go. Most of them have joined. Welcome to Pre-Bill with William O'Neill India. This is Rajasekhar Kongari, Equity Research Analyst. I'll start the podcast by discussing how the Nifty is placed. This is the Nifty is a daily chart taken from MarketSmith India website. The green line here is a 21 DMA, that is 21 daily moving average. Nifty reclaimed it during the week, after which it has advanced 2% on two sessions, that is 1.1% on Wednesday and 0.8%, 0.9% on yesterday, that is on Thursday. Yesterday, Nifty has also reclaimed its 50 DMA. It has closed just above it. That is, you can see here the level for 50 DMA is 16,121. Nifty closed at 10 points above that level. So it's a good sign for bulls. We would like to see the Nifty holding above this level in the coming sessions. After which, if you have a follow through day today, then Nifty should close above 16,374 on volume higher than the yesterday's session. If that happens, we'll move the market status to confirmed uptrend. Once we are in confirmed uptrend, we'll start adding stocks to our model portfolio, which are leading the sectors, are leading the general market, breaking out of their base patterns, or reclaiming their key moving averages. Yeah, however, you can see here the Nifty is way below its 200 EMA, that is a green black line. For more momentum to come in, positive momentum to come in, Nifty should trade above this level. Until then, there might be some few hiccups and a few zigzag movements in the general market. If this level is reclaimed, then we can go long on the equity market. Some key news events happened during the yesterday evening or today morning. IMF chief Christina has told that there is a possibility of global recession. This is a negative for overall global markets. And India's coal-based power generation has increased 27% year-on-year basis in the June quarter, according to government data. One more positive news is that mobile imports were down nearly 33% in last financial year. This is because of increase in domestic production. This is a positive sign for India's economy. And if the manufacturing sector improves, then there will be a lot of employment generation in the country. This will take up unemployment level to the lower levels. Tata Power is planning to invest nearly 75,000 crores of capex in the green energy, according to Tata Group Chairman N. Chandrasekaran. This is also a good sign for the upcoming electric vehicle theme that is coming up. So Tata Power companies like these, if they invest or increase their capex in such areas, then the electric vehicle theme will shoot up in the near term. JSW Steel has reported its Q1 output numbers. Consolidated output has increased 16% to 5.8 million tons. This is a good sign. Vedanta is planning to acquire Athena Chattisgarh Power for 564 crores. So stocks like Tata Power, JSW, Vedanta will be under focus today. And also TCS will also be under focus because it will announce its Q1 results. And also MMTC, that is a mining company of India. Talking about institutional activity yesterday, FIs have sold 925 crores, but that was compensated by domestic institutional investors, which have bought 980 crores. Last night, Wall Street has closed sharply higher, mostly because of rate hike fears are receding at this moment. Dow Jones was up 1.1%, followed by S&P 1.5%. Nasdaq was up more than 2%. The similar thing is happening in Asian markets as well. Most of the indices, major indices, Kospi, Nikkei were trading more than 1%. Shanghai is trading flat to positive bias. Hang Seng 0.6% higher. Brent crude is trading at $104 per barrel. It has come down sharply from nearly $130 per barrel. US 10-year bond yield is at 3%, mostly because of sharp selling in equity markets. Money has been flowing into bond market recently. Rupee against dollar has been depreciating in the recent times. It is trading nearly at all-time highs at nearly 80. This is bad for our imports because we have to pay higher in rupee terms. SGX Nifty is also pointing higher opening for Indian market, nearly around 120 points higher opening we might see on the Nifty. If that higher opening is sustained and Nifty moves nearly 370, 380 level, then we might see a follow today in today's session. If that happens, we are going to add stocks to our model portfolio. So please be prepared for it, and also check our email alerts if you are adding any stocks to our model portfolio. This is a sector placement as of yesterday's closing. You can see most of the indices have been, sectoral indices have been moved to rally recently. Realty, bank, IT, financial services, metals, auto, all the sectors are in rally. However, the overall Nifty index is not in rally. That is the reason we are waiting for adding stocks to a portfolio. However, if the sectoral place indices are in rally, that gives a good sign that there is a broad-based buying happening in the market. Siemens, this is a chart we have taken for the chart of the day. Disclaimer here is that we are not recommending this stock to add to our portfolio, but just for educational purpose, we would like to discuss about this chart. You can see here after breakout on Monday session, there has been sharp follow buying, which is seen in the Siemens. I can also the volume was also on the above average volume. This indicates the institutions are accumulating, or mutual funds are accumulating this stock. That is a good sign. The stock has been forming a base patterns from the last December to December, January. It was not able to break out and sustain because the general market is not conducive. The major positive about this stock is that many times it has found support at its 200 EMA. That is a good sign for the stock. And here also you can see it after breakout, it has made a new high. That is a good sign. Couple of pointers here that number of funds, that is institutional funds invested in the stock, have increased consistently on quarter-on-quarter basis. 460 in June 2021 to 512 March 2022 quarter. That's a good sign. Ratings wise as well, a master score of 68 is a good sign. Fundamentally, there is some lagging indicators because EPS has been on down. It is on sliding trend. That's why CPS rating is 47. However, technical ratings like RS strength on A by D rating, that is accumulation distribution day, that is at A plus, indicating a strong technical strength for the stock. If the market moves to confirmed uptrend, we like to add stocks like these, which are resilient in the current market and which are leading the general market. Thanks for joining today's Prepel. Have a good trading session.